Futures, little change, but in the green after 7 days in a row of gains. 30 minutes until the start of the cash trade today. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, we are in waiting mode. Investors are looking ahead to Jackson Hole later this week for clues on the policy path ahead.
And we have a record offer. Couche-Tard makes a bid for the owner of 7-Eleven in what could be the largest foreign takeover of a Japanese company.
And a crucial week for the race to the White House. Harris and Trump battle for momentum and attention as the DNC kicks off in Chicago. Let's take a look at where markets are trading 30 minutes to go until the bells ring. We are in wait and see mode. You can see futures just a hair higher following the best week of the year. The S&P 500 and the NASDAQ 100 up about 0.1%. Of course, we have earnings, we have Jackson Hole, and we have politics to look forward to. But right now, pretty much unchanged. I'm going to call that same thing, too. If you take a look at the bond market, 10-year yields just about flat, Matt.
All right, let's take a look at one of the stocks that we're watching, or actually really a currency that we're watching here. This is the yen. I've inverted it to make it easier to understand. So as the yen rises, you can see that the NASDAQ historically comes down, and the inverse is true as well. Today we have strength in the Japanese currency, but we still see green arrows on the NASDAQ. Will that hold throughout the day?
Perhaps that carry trade unwinding. Taking a look also at some individual stocks because it is a merger Monday. We are watching AMD. The company has agreed to buy server maker ZT Systems in a cash and stock transaction, and it's valued at almost $5 billion. It's going to add data center technology that will boost efforts to challenge NVIDIA, and AMD now is up about 0.8% pre-market. NVIDIA fluctuating pre-market, but now up almost 0.2%. Also watching Estee Lauder, shares were sliding earlier this morning after the cosmetics company issued weaker than expected profit projections. It also said its CEO plans to retire at the end of June of 2025. Estee Lauder's, though, now still in the green, up more than 1%, Matt.
All right, we are seeing gains again, really, in futures today. And as I said, 7 days in a row of gains after the manic Monday that was a couple of weeks ago. It seems that investor sentiment has really bounced back.
Yeah, big time. And you can see that, of course, in the equity performance. This is a big week, though, guys. Of course, we have Jackson Hole, we have the DNC. We also have retail earnings. We've just been talking really until our faces turn blue about the state of the consumer. We're really going to see some important reports this week when you think about Target, Lowe's, TJX.
And we're talking about that merger Monday as well. You've got to think about how that keeps valuations up when you have competition in the market for deals here. We are finally seeing some activity after some tough days this summer. We're on the rebound.
Yeah, absolutely. That seems to be the story across a lot of different issues that we're going to touch on throughout this program. Joining us now at the desk to discuss how she's positioning for the week is Nadia Lovell, Senior U.S. Equity Strategist at UBS. Nadia, great to have you here in the studio with us. You know, the VIX spiked up to 65 a couple of weeks ago, and everyone told us to buckle up for, you know, more volatility to come. We're seeing it trade right now at 15. Are we going to see another bout of volatility, or is this smooth sailing until maybe the election?
Unlikely that it's smooth sailing. I mean, seasonality will start to kick in again when we get into September. I don't necessarily think that we'll get back to the spike in VIX that we saw a few weeks ago, but remaining in sort of the mid-teens, probably unlikely. Maybe we'll trend back up into sort of the 20-plus range. We typically see volatility pick up in September, October ahead of an election. And then also we'll have conference season started right after Labor Day. And so we'll get updates from companies on the state of the consumer, the state of the economy, and overall profits. So that could cause some volatility in the market as well.
Yeah, you think about some of the potential catalysts that could get us up to the 20s again on the VIX. I mean, it's a pick your poison type of week. Jackson Hole, politics, retail earnings. When you think about sort of the cadence of this week, what are you going to be paying most attention to?
A couple of things. Of course, earnings are most important to us. You know, we want to hear what companies are saying, what pressures they're continuing to have. But then, of course, we have at the end of the week Jackson Hole, and we will want to hear from Chairman Powell and how he's interpreting the data and whether we'll start to get some smoke signals on the potential rate cut in September. Certainly, some of the committee members have been coming out and some of the governors have been coming out suggesting that we could start to see the cutting cycle in September, which we do believe will start.
of Jackson Hole as well. A lot has changed since that last Fed meeting at the end of July. When you think about Jackson Hole, how much can it recalibrate what investors have now baked into the market of more than 100 basis points of rate cuts through the end of the year?
You know, we've seen that repricing come down quite a bit in the last week. You remember at one point during the height of the volatility of the last couple of weeks, the market was pricing in over 30 basis points of cuts. Now we're sort of at 95 basis points of cut. We do think that Chairman Powell is likely to push back on the market about 50 basis points of cut simply because of the macro data of the last week is coming better. We've had retail sales. Inflation seems to be back on that disinflation path again. And so the inflation data suggests that the cutting cycle should start, and then how deep that cutting cycle will depend on the labor market. And right now, claims have come back down. All we'll be watching September 6th to see what happens on payrolls. I think that's going to determine whether we get a 50 basis points. But standing here today, in terms of the data so far, it does suggest that 25 basis points is more likely. And so Powell is likely to push back. I think we've come a far way from 2 years ago, that 8-minute speech where he said they would be paying ahead. We're 80% back to, in terms of inflation target. And the economy is growing above trend. Like,
right.
Wow.
Right.
Impressive.
Well, but we do expect a cutting cycle, right? At least they've prepared the market for that. What do you want to own into a reduction in the Fed funds rate?
I think you want to still continue to hone those quality names. I think the market has already sort of priced in a rate cut. So it really goes back to fundamentals that are going to drive this. You have seen small cap catch a bid in terms of the expectations of rate cuts. But reality is, anything more than 100 basis points would suggest that we're in a more dire situation for the economy. And that's not good for small companies. So it wouldn't necessarily lead into that trade. We would continue to lead into those secular growth stories within tech, add some cyclical exposure in terms of industrials, and maybe even a little bit of financials that, could benefit from a rate cut as, the cost of capital comes down.
Well, let's talk about the rest of the year, because your house view, your S&P 500 price target, 5,900.
Yeah.
You think about where we closed on Friday, just above 5,500. Is there any way to get to 5,900 by the end of the year without tech leadership, if you just think about the makeup of that benchmark?
I think is going to be challenging. You don't necessarily need tech to have the same magnitude of leadership that it's had over, the last several months. We think that leadership will temper, but tech will continue to lead. We would like to see the more broad-based participation of the market, because that will help sustain this, bull market over the longer term. And you're already seeing that. You're seeing that in terms of the earnings growth that we saw in the second quarter. You're finally seeing the broadening out of the earnings. You're seeing the 493 back into the black after several quarters of contraction. But again, we think that's tech. To your point, it's just the sheer fact that it's such a large market weight in the index that tech has to be a part of that story.
Well, just to tie a bow on that point, it sounds like what you're saying is you think about that broadening out. It would be nice to see, but it sounds like a nice to have rather than to get back really into bull market mode. We need big tech.
This past year has shown us that they need to be part of the participation. I don't think that the broader market is enough to get us to that 5,900. Maybe the broader market is enough to get us to 5,600 and sort of stay there, but I think that you need tech to be a part of that.
Here's the thing. The last time we saw the jobs report, there was two words that pervaded the market that seem to have go away. That is growth scare. Yeah. And if you believe in that broadening of the market, then how much does that growth scare start to really halt a further rally?
Absolutely. If we do see a weak job market, job report again on September 6th, if we see a tick up on unemployment, you are going to get the market questioning again, is economic growth really sustainable? I mean, so far you're seeing the data coming in pretty strongly. And if you see any sort of weakness from the consumer, that broader rally is not going to be sustained. People will continue to revert back to sort of the old trades of secular winners, more quality companies. And that is, at the end of the day, that has proven to be technology companies.
All right, Nadia, great setup for a very busy week ahead. Really appreciate you taking the time on this Monday morning. That, of course, is UBS Senior U.S. Equity Strategist, Nadia Lovell. Meanwhile, let's take a check on futures, because you have a rally extending a little bit in the market. Just in the past couple of minutes, you've seen the S&P 500 extend gains, up 0.2%. Same thing, too, if you take a look at the Nasdaq 100, about 20 minutes to go into the cash trade. Let's get a check on what's moving underneath the hood. We're going to do that with Abigail Doolittle.
Well, helping these indexes rise is Google. Alphabet, the shares of Alphabet headed to a third up day in a row, right now in the pre-market, up 1.6%. Some speculating that if Kamala Harris were to win in November, that it could be a way for Alphabet, Google, to wiggle out of a proposed breakup based on her legal relationships, and also the possibility that she could shake things up at the DOJ and FTC. Very speculative, but again, up 3 days in a row. That said, down more than 10% from its July peak. Fubo TV, let's take a look at this one because it is soaring, up 15 to 16%. There is a pretty big bearish short interest there, but it's jumping after the Fox Disney sports service streaming service was blocked from launching its streaming sports business late on Friday. Down 52% year-to-date into this. Let's see if the rebound can continue. And then finally, Sonali, let's take a look at Coinbase, because, of course, crypto, Bitcoin, Ether under pressure, both down more than 2%. And Bitcoin looks like it's heading back down toward that $40,000 per Bitcoin or its long-term uptrend, taking the crypto space with it. Although Coinbase at this point well off the lows, down more than 1 or 2%. Right now, down just slightly.
Thank you so much, Abigail. Also want to bring you some breaking news because the SEC is charging Carl Icahn and Icahn Enterprises, that is ticker IEP, for failing to disclose pledges of companies' securities as collateral for billions in personal loans. Both Icahn and IEP have agreed to pay $1.5 million and $500,000 in civil penalties to settle these charges without admitting or denying the findings. Very interestingly, these go through December of 2018 to the present, and this was 51 to 82% of IEP's outstanding securities as collateral pledged to secure margin loans worth billions from various banks.
Here you see a longer-term look at the stock, and of course we knew about this in May of last year when the U.S. attorney was seeking info on some of the units, when people started talking about short sellers, especially what these loans were backed by, and the stock took a hit then. So today's story is just a continuation of what we saw last year in May.
And perhaps a closure as well.
Yeah, absolutely. All right, coming up, a big week in the race for the White House as Democrats head to Chicago to kick off their national convention. We'll be there as well. This is Bloomberg. Let's get now to high interest to look at what's making headlines around the world. Chinese copper exports fell sharply in July from an all-time high as demand for the metal improved. Exports fell 40% from June, but that's still nearly double last year's level. President Biden's top diplomat, Anthony Blinken, met with Israeli President Isaac Herzog as the U.S. tries to broker a ceasefire agreement between Israel and Hamas. With the two sides blaming each other for the ongoing conflict, the chances for success look obviously pretty dim. And Chicago and its governor are in the national spotlight thanks to the Democratic National Convention that kicks off today. Governor J.B. Pritzker personally lobbied for the event for years, wooing President Biden and the DNC bid team with fancy meals and a private concert from Metallica. Biden's a Metallica fan? Did you know that?
I did not know that, but a very fun fact indeed. Now we're going to get more on the race for the White House as the Democratic National Convention gets underway, because over the weekend, Vice President Kamala Harris spoke in Pennsylvania. Here's what she had to say.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. You know, when you know what you stand for, you know what to fight for.
And joining us now to break down the crucial week ahead in politics, I'm pleased to say we have Henrietta Treyz. She is Economic Policy Research Director over at Veda Partners. So you take a look at the polls. They're starting to tilt in favor of Harris. You write in a recent note that basically she's polling with a national average of +1 when it comes to her lead over Trump. But is that enough to win the whole thing at this point in the race?
It's not yet, but it's getting there. And what you've seen from the data since I published that on Friday is now she's inching up. We want the average for a Democratic candidate, particularly one who's not viewed as the incumbent. In this race, Donald Trump is viewed as the incumbent, having formerly been the president, and Kamala Harris is more of the upstart candidate. You want to see, since we have to go through the swing states and the Electoral College, a situation nationally that's sort of +2, +3, +4 for the Democratic candidate, and she's not quite there yet. But what will happen this week is the DNC will take place amidst a lot of pomp and circumstance, and that historically boosts the candidates by 2 to 3 points. So by the end of, call it next week, when we have fresh data, I wouldn't be surprised if she's outside the margin of error and firmly in the range of winning this election in the polling data.
You will notice, especially if you poll voters in New York or California, that the SALT deduction cap matters, right? Trump basically punished these states by taking away their SALT deduction, and he put it into his 2017 tax cuts legislation. What are the positions of Harris and Waltz on these tax cuts and deductions?
Critical question. This is a $1.2 trillion revenue raiser from coastal blue states. So when Mitch McConnell was writing this package back in 2017, this was their #1 pay for, and it effectively paid for the bulk of the corporate tax rate cut that was permanent and the individual tax cuts and other preferences that now expire at the end of next year. My conversations with Democrats on the Ways and Means Committee, who are the ones who will be writing next year's tax bill if they win the House, run squarely through a number of seats in California and New York that are, disproportionately punished by the SALT cap. So the expectation is that Democrats next year, if they control the House and the Senate and the White House, they will allow the SALT cap of $10,000 to expire. And that means everything goes back to the way it was before 2017, and you have an unlimited deduction that does not penalize the coastal states.
Also interested about the child tax credit discussion here because both Kamala Harris as well as J.D. Vance have brought this up in discussions so far. At the end of the day, it's something fiscal conservatives hate. You've seen a lot of Republicans vote against such issues in recent past. How do both parties plan to really address here what many Democrats are calling the care economy?
Yeah, absolutely. So Kamala Harris's plan is to provide a $6,000 child tax credit. And as you know, providing tax preferences to any individuals in the code is so much more expensive than doing, for example, a corporate tax rate reduction. Each one of those points is $150 billion. On the child tax credit side, making that permanent is over $1 trillion. There's just more of us, right? So it is a very expensive component. But if you're going to take the position of the Trump-Vance ticket and say, you know, we want people to be having children, we want to support families and have a federal government and an American strategy that promotes child birth, then providing for a child tax credit makes a lot of sense. So J.D. Vance has been on the road talking about a $5,000 credit, which would also be very expensive. But this is sort of the populist wing of the Republican Party versus the establishment wing of the Republican Party and where they diverge. In general, the populist wing of the party, the sort of Trumpian MAGA wing, is growing larger in the United States Senate, but it's still a minority. So it's going to be really difficult to pass that unless Democrats control one of the chambers of the House or Senate next year.
And I want to talk a little bit more about Harris's economic plan, her policy vision there, some of which was laid out last week. Of course, sort of that ban on corporate gouging, especially at the grocery store, got a lot of attention. And we heard from Republican Senator Lindsey Graham over the weekend on Meet the Press saying that she's going to the Soviet Union playbook to lower prices, called price control. You think about the large cohort of undecided voters that are still out there. How much currency do those types of attacks, that type of language, have with that group?
Well, it's interesting because, of course, Republicans have proposed this exact same type of ban previously. I think it was Senator Hawley, though I might be mistaken. If you're looking at specific industries in the grocery space, meatpacking, for example, you have effectively a monopoly that has allowed for price controls. And so what Kamala Harris is trying to get at is really pocketbook issues. The #1 thing you hear from voters is, you know, the price of groceries is too high and the price of gas is too high. There's not a whole lot you can do aside from try to jawbone and discourage corporations, grocers, meat packers, et cetera, from reducing prices. So effectively what this means is that Kamala Harris, if she were president, and probably Donald Trump too, given the support that Republicans have had for the same kind of strategy in the past, to try to pull them all into the White House. This looks like sort of a press availability where they're all sitting around a big table and talking about how to bring prices down. That's sort of the strategy. There's no legislation that would pass to limit prices. That's not a realistic outcome or even something that Congress is considering. So this is more of a, you know, using the bully pulpit of the White House to sort of jawbone companies into doing what you want.
Henrietta, I got to ask, even if J.B. Pritzker brought out Metallica, why would the Democrats decide to have their convention in Chicago? I mean, historically seems like probably the worst idea that they've had. And especially as you've got protesters, you know, anti-Israel protesters who are going to try their best to get Trump elected. What a disaster, right?
I mean, certainly not looking at Illinois as a swing state. And Republicans obviously went to Milwaukee for theirs. You'd wonder why it wouldn't be in Pennsylvania. But I think it maybe really speaks to how much the Democratic Party did not anticipate that Kamala Harris was going to be the presidential candidate with Tim Walz at this point. This race is now pivoted towards Georgia and North Carolina, Arizona, and Nevada, where Kamala Harris is making dramatic inroads and starting to paint a picture that looks like a combination of 2020 and 2008. So a strategy that really focuses on those states is, I think, paramount. I don't know that you need to spend all this time in sort of the Rust Belt area where Illinois is, but Pritzker did a very good job lobbying for it, and I guess Metallica works wonders.
All right, Henrietta, great to spend some time with you ahead of the DNC kickoff. That, of course, is Henrietta Treyz of Veda Partners. This is Bloomberg. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, the drug maker Siga Technologies falling today after it announced that a study of its experimental therapy to treat Mpox didn't meet its primary goal. Next up, Uber-backed e-scooter company Lime launching its service in Japan. It's the latest sign of the country's belated acceptance of the sharing economy. Lime's expansion in Japan is in contrast to slowdowns in other cities. And finally, Rocket Lab announcing that 2 Mars-bound spacecraft are on their way to Cape Canaveral, Florida, in preparation for launch. The spacecrafts are scheduled to launch to Mars sometime this fall. Of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Matt.
All right, let's take a look quickly at what's going on in futures ahead of the opening bell. Just about 4.5 minutes away. We still see green arrows, though very slight right now. As the yen continues to rise, that'll put some emphasis on how painful this carry trade is going to get, if there is indeed a lot of it left. And after 7 days of gains, you have to wonder when investors are going to start to take at least a little bit of profits off the table. Coming up next, Nimrit Kang joins us, CIO at Northstar Asset Management. With her stock pick, she's going to give us some individual names next. This is Bloomberg. All right, we have just about 23 seconds until the start of the cash trade. It looks like we're going to see an 8th consecutive day of gains. At least we're on track for that right now. You can see futures, at least on the S&P, up a little bit less than 1/10%. We're turning lower on the NASDAQ 100. If you see the tech stocks fall, the big heavyweights, then we may see the whole S&P 500 come down as well. On the New York Stock Exchange, Israeli mapped in New York, ringing the opening bell. What do they do? Your guess is as good as mine. We can Google it. The folks at Google on the VP level are ringing the opening bell, along with some content creators down at the NASDAQ. In terms of the trade right now, we're going to bounce, I'm guessing, back and forth between gains and losses. Let's get it over to Katie Greifeld to take a look at what's going on.
Well, right now we're bouncing to the upside again when you take a look at the S&P 500 and the NASDAQ 100. Of course, small gains coming off of the best week of the year for the S&P 500. We'll see if it can notch an 8th straight day of wins. The Russell 2000 also getting in on the action. The Russell 2000, those small caps, currently up about 0.1%. Now, one stock to keep an eye on at the open is, of course, Fubo TV, absolutely soaring after Fox, Warner Brothers Discovery, and Walt Disney were blocked by a judge from launching their streaming sports service 1 week before its rollout. Remember, Fubo TV had filed a lawsuit against the 3 companies, and shares absolutely flying right now, currently up about 20%, Sonali.
Fascinating over here too, Katie. I'm keeping an eye on AMD and Nvidia because AMD this morning agreed to buy server maker ZT Systems in a cash and stock deal valued at $4.9 billion. It's going to add data center technology that will boost efforts to challenge Nvidia. You did see AMD as high as 154 share pre-market, now fluctuating into the first trades. Nvidia still down about 0.5%. Matt.
All right, we are watching Estee Lauder as well. The cosmetics company issued weaker than expected profit projections. It also said its CEO plans to retire at the end of June 2025. So keep your eye on those shares. We'll take a closer look right now with Bloomberg's Abigail Doolittle. Abby, what do you see?
Yeah, and on this news, Matt, we have a ton of volatility on an intraday basis. At the pre-market low, shares down nearly 10%. Investors really looking at that guidance for the fiscal year 2025. We'll be taking a closer look at that in a moment. And then higher right now, down about 0.2%. And I suspect that the reason that they're higher, based on analyst commentary, it does have to do with that management shift at the end of June of 2025, as you were mentioning. CEO Fabrizio Freda planning on stepping down. As for the guidance and why the stock had been down so much for the fiscal first quarter, that's the September quarter, looking at a very small adjusted earnings of 1 penny to 9 cents. That represents a downside from the year before. And then on the year, you can see that they're looking at sales downside of down 1% to 2%. But take a look at that adjusted earnings. This puts a tremendous amount of pressure on the other quarters. Maybe some folks a little bit skeptical as to whether or not that can happen. We'll have to be watching. We will be watching these shares all day long. But it's not just Estee Lauder reporting this week. We have a lot of retailers. TJ Maxx up 20% on the year. That Treasure Hunt, Target up just about 2%. This company, of course, has had a hard time. Folks thinking that this current quarter, or the quarter that was, that they're reporting easy comps. Macy's down about 12%. There's some transaction data suggesting that they could put up a inline quarter. And then there is Estee Lauder down 36% this year, down about 75%, Matt, from its 2022 peak. Wow. The new CEO, whoever that will turn out to be next year, a lot of work cut out for him or her.
All right, Abigail, thanks very much. Abby Doolittle talking to us about the individual stocks moving just minutes, I should say, into the trading day. Let's talk with Nimrit Kang right now, Chief Investment Officer at Northstar Asset Management. Nimrit, we have seen about a 10% drawdown from peak to trough in the S&P 500 this year, but the last 8 days in a row, at least the last 7 days in a row, have been positive, and today we're looking at green arrows as well. Does that make sense to you that this volatility kind of dissipates after just a little bit of a correction?
Matt, feels like it's a little too early to call an all clear for us. So, we've gone back and looked at data going back to 1970s, and intra-year declines are pretty common occurrence. Last year, we got an intra-year decline of 10%. This year, 5%. But as we're going into a seasonally pretty weak and volatile session of the year, it feels to us that there's more volatility to come. We're going into an election year. And of course, we are also contending with geopolitical risks, both in Middle East and Russia, Ukraine, which hasn't been resolved or doesn't seem any signs of resolving anytime soon here either.
So how do you put that together into a portfolio? Because listening to you speak, it sounds pretty cautious, I have to say. And when you think about what that means at the asset allocation level and the sector allocation level, where does that leave you?
Well, we focus on what we can have a lot of certainty and conviction on. We look at stocks where we have underlying conviction on the long-term fundamentals. For example, people are getting older. Doesn't matter what happens with the economy, doesn't matter who's in the White House or not. People are getting older. So leaning into companies that have services and products to help seniors live healthy lifestyles. That's one area. Similarly, we're doing your regular portfolio management, trimming our winners and deploying into companies which have been laggards, industrials, a lot of other companies where we feel like the long-term outlook still looks very good. So those would be some of the things we're doing from the portfolio management perspective.
It's fascinating. If you look at one of the more unloved sectors that has been looking to find a bid, it is financials. I'm wondering how you scour the universe there, given that we still have a 210 curve, that's still inverted to the tune of about 18 basis points.
Right. Not all financials are created equal. That's the first thing we would say. But, given that backdrop, there are interesting ideas, great opportunities on a bottom-up level. One example we have for us is Eastern Bank. Eastern Bank is a stock we hold in the portfolio. And one of the reasons we like this company is it's a small regional bank in the Boston area. It's been continuing to take market share over a number of years. It's a #1 SBA lender, so an important role in the local community. They recently are merging with Cambridge Trust, so leaning into more of the private wealth franchise there. They have very strong capital adequacy ratios, good balance sheet, and have been very proactive in making sure that they reduce their dependence on wholesale funding. So that would be one of those stocks which long-term, very good outlook, will be a beneficiary as Fed drops the interest rates here.
You've picked basically a $3 or $4 billion bank, regional bank, Nimrit. I'm sure there are hundreds from which to choose across the country that could be beneficiaries of a consolidation. Is that one of your themes?
For us, the way we think about, again, there are opportunities everywhere, right? And it's how you want to parlay those into the portfolio. This is a very easy, simple to understand bank that we can see what a big purpose it has in the local community. As you said, there are plenty of choices to choose from. It's just where you focus your interest on. And this is one of those where we feel that conviction.
And anecdotally, it feels like this earnings season in particular, we're talking a lot more about the C-suite, about executive leadership than we have in earnings cycle previous. Of course, the Estee Lauder CEO announcing he'll retire later next year. But there was a really interesting story on the Bloomberg terminal last week that said of the 191 CEOs who have left companies in the Russell 2000 or 3000 rather this year, 74 were considered to be fired or forced out. That is the most at this time of the year since that data began being tracked in 2017. So when you're looking for stocks and you're doing that due diligence at the single stock level, how important is management to you right now?
Management is always very important. It's, management is who makes sure that the company executes on their long-term strategy and vision and can execute day in and day out. Very important. But we would say when we look at management, it's not just about the C-suite. It's about the whole culture of the organization. For example, you mentioned some of the CEOs taking off. It's not just about the CEO. It's about the whole team that's propelling and making that culture and driving that forward. But yeah, it's definitely something we pay a lot of attention to.
I want to ask about Sprouts Farmers Market. I had only heard of this. The store fleetingly, but it's like a $10 billion market cap. How did you pick this stock and what's the theme?
Yes. So Sprouts, we picked Sprouts because it's a great illustration of important to build a diversified portfolio outside of the household names, outside of the Mag 7 names. Sprouts, it's a regional grocer. They focus on natural organic products. We see a long-term trends towards consumer gravitating towards natural organic groceries, having products, food items that are free from artificial ingredients. So Sprouts caters to that trend. It's very small. It's only 400 stores. It started in the southwest of the U.S., but it continues to expand and continues to bring consumers into the stores. What we like about Sprouts, Matt, is that their value proposition, similar to what we heard from Walmart, the consumer wants value for their money. And Sprouts is one of those companies that is continuing to offer that value for money. And hence, as a result, they've been able to post very good comp store sales in addition to expanding new stores. And as a result, the stock has done quite well year to date as well.
And Sprouts, of course, is one of those names that Nimrit holds at Northstar. A very deep look here at value in this market. That is Nimrit Kang of Northstar Asset Management. Thank you so very much. Now coming up, more on the shakeup at Estee Lauder as the makeup giant dramatically missed analyst expectations. We're going to have the latest on that next. This is Bloomberg.
This is Bloomberg Open Interest. Quick check on the stocks right now, on the indexes. We do see gains on the S&P pretty solid, 0.2%. The Nasdaq pretty much unchanged right now, and the small caps are gaining about double what we see on the large caps. Katie?
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Piper Sandler says that Shake Shack is no longer a buy. The firm downgrading it to neutral as it tempers its view on the fast casual dining space. The analyst says he's not necessarily negative on the stock, but he sees challenges ahead when it comes to the company's prices. Piper also out with a downgrade for Dutch Brothers and Sweetgreen this morning. Next up, RBC Capital Markets says that Gates Industrial is a buy. The firm sees the potential for increased margins for the power transmission company and says there's opportunities for Gates when it comes to being a water pump supplier to data center liquid cooling systems. And finally, Morgan Stanley telling investors that HP, not a buy. The firm downgrading the hardware company to a hold, citing limited valuation upside. HP, of course, reports earnings next week, Matt.
We're very much looking forward to that, Katie. Thanks very much. One other stock that we're watching this morning is Estee Lauder, the cosmetics giant falling after issuing a weaker than expected outlook for next year. The company also announcing CEO Fabrizio Freda will retire next year. Joining us to talk more about this is Bloomberg consumer goods reporter Dasha Afanasieva. And Dasha, this is a stock that's been really volatile on the day. Also one of the biggest cosmetics makers in the world, although L'Oreal is far larger. We were just looking at the market caps here. What does the miss mean to you?
It means that, this was the quarter where Estee Lauder was supposed to really turn things around. They had a recovery plan that they launched in November, and it was supposed to bear fruit, and analysts expected a pretty decent increase in revenue this quarter. Instead, this massive downgrade has been issued for the next quarter as well, which just throws into question the efficacy of the whole plan. And to boot, we'll have a new CEO that they still haven't found. Fred is going to resign and step down in the next 12 months, and they're going to have someone new. We don't know who that is. The CFO, the long-standing CFO, is also stepping down. So there's all of this change, and in the midst of it, a turnaround that isn't quite gathering pace in the way that it should.
And to be fair, while shares have risen really meaningfully under Freda, they've still been down almost 36% this year. And if you think about that turnaround plan that you were talking about earlier this year, with that added uncertainty about who a new CEO would be, what is the expectation here for how fast they have to find somebody and execute a new plan for Wall Street here?
I think they have to bring someone in really quickly because there's all of those things that we just talked about. But on top of that, there's external factors that are actually pressuring L'Oreal as well. There's a slowdown in China. The US consumer has been looking pretty weak. And so they're contending with a lot of external and internal factors. And in the meantime, corporate governance is tricky at Estee Lauder. The Lauder family has a 38% stake, but almost all of the voting shares, and William Lauder remains chairman, and that's an executive chairman role, which means that he still has a huge amount of influence. So I think to get Wall Street's confidence after this change, after having the same people in place at the top for 15 years, they really have to move quickly and decisively and show results.
Yeah, big time, of course. A lot of work cut out for whoever the next CEO may be. Estee Lauder shares currently down about 2% intraday right now. Our thanks, of course, to Bloomberg's Dasha Afanasieva. Now, coming up, supersize this Slurpee. Canadian company Couche-Tard making a bid for the owner of 7-Eleven stores.
Couche-Tard.
Couche-Tard. I've been working on that, all right?
Owner.
All right, I wasn't supposed to do this tease. In any case, it may be the biggest foreign takeover of a Japanese company. More on that next. This is Bloomberg. This is Bloomberg Open Interest. Let's take a look at the stock market. About 20 minutes into the Monday trading day, you can see the S&P 500 sitting on gains of about 0.2%. This would be an 8th straight day of gains if it holds. We haven't seen that since November 2023, so keep your eyes peeled there. The Nasdaq 100 also up, but a little bit less, and small caps leading the way right now, Sonali. The Russell 2000 up 0.4%.
Good day for those small and mid caps once again. We're going to switch gears, talk about Merger Monday, a massive deal on the horizon. Circle K operator Couche-Tard making a bid to take over rival and 7-Eleven owner 7&I. This deal would be the biggest foreign takeover of a Japanese company. 7&I has come under pressure from activist fund Value Act. And fun facts, guys, there have been actually a record number of activist campaigns in Asia, with Japan passing the entirety of 2023 in just the first half of this year. That is a record numbers of campaigns in Japan. There have been more than 24 campaigns this year there, as the company tries to become more shareholder friendly. Much of the activist activity is from local activists, but Value Act is a notable outsider. Value Act, of course, with two co-CEOs really pushing into Japan at a greater rate. Fun fact also, 7&I used to be also owned by Third Point, which is how the current CEO got here. We don't yet know how Value Act is going to react to this takeover offer, but we're going to talk about it more with Bloomberg's deals reporter Crystal C. Because one major outstanding question about this merger is, will Japan let it happen, when we know that their foreign trade ministry here has been looking to make the country more shareholder friendly? Is a deal shareholder friendly?
Well, the really big challenge here is whether this deal would get antitrust. And we're not just looking at the Japanese authorities. We should remember that there are a lot of 7-Eleven stores in the U.S. as well. So it's also subject to U.S. antitrust. And we all know that U.S. antitrust has been extremely challenging, especially when anything that has a retail footprint. Looking at Albertsons, Kroger, it's been years in the making and it still hasn't gone through. In this regulatory climate, I think this is the biggest thing that any investors will look at. And obviously, whether it delivers shareholder value, whether that synergy is going to make sense, that's always going to be something that investors focus on. But the feasibility of it really lies on the antitrust element.
Where are the majority of these stores? I mean, we think of 7-Eleven as a U.S. company. Nobody ever thinks of the slushie as a Japanese invention. But obviously, it's been in Japanese ownership and Japanese hands for a long time now. So where are these assets?
So if you remember, 7&I actually had made a move to acquire a bunch of Speedway gas stations. And a lot of the stores actually are across the U.S., not just in cities like New York. You have a lot of suburban gas stations. And that was also a very challenging situation, a very challenging antitrust environment there as well. So it's all in all, I think U.S. is actually going to be the biggest challenge. And Couche-Tard is based in Canada. So you kind of it's a really global operation that you're kind of inviting scrutiny from practically everywhere.
Crystal, you cover activists very closely here, and Value Act has been in this stock for a while now. How do you think that this deal plays into what they ultimately want from the company?
So Value Act actually ran a proxy campaign last year, and it was unsuccessful to get on the board. A lot of people in the activism world like to mention how it is really difficult to run an activism campaign in Japan because of the cultural differences. There are a lot of retail shareholders in Japanese stocks, and they tend to support the management. So for an outsider to come in, you have to have a very different approach. But that said, like we were just mentioning before the segment, the Japanese activism volume has really taken off. I think largely because of the stock performance, as well as the yen being really depreciated. So it's still a lot of opportunity there. Value Act hasn't come out with a statement on the 7&I news, but we should expect them to have an opinion on this.
And Crystal, we have just about a minute left with you, but I want to talk about broader M&A here because, of course, we have this deal. Last week, we were discussing with you, of course, Mars agreeing to buy Kellanova, for example. And it's interesting that you've seen this summer really heat up when it comes to the M&A world because in just a couple of months, we have a U.S. election. So when you think about the course of the remainder of the year, would you expect momentum to build, or is this sort of the last rush?
The deal maker kind of are in two camps. On one hand, you have people who are like potentially optimistic that says things are going to continue, election isn't that big of a factor. But like we had just talked about, antitrust being such a big element and such a big influence in any kind of deal making these days, it's really hard to discount that. We could probably see things getting out by maybe September. And from then on, it's really getting perhaps too close to the election. But then you're also seeing that this particular situation, it mainly isn't U.S. focused. It's a Canada, Japanese deal. So international deal making will continue. So the world kind of goes on, the M&A world goes on, even when the U.S. election is still going.
Crystal, great to check in with you. Thanks so much for joining us. Crystal C. talking to us about Couche-Tard and Seven & I, as well as the broader M&A picture. Let's get to your trading diary. What you need to be watching this week, the DNC begins today in Chicago. We'll go there. Then tomorrow we get another read on the consumer with Lowe's earnings. On Wednesday, more retailers, Macy's, Target, and TJX all report. Plus we get Fed minutes. We round out the week with Fed Chair Jerome Powell speaking on Friday at Jackson Hole. This is Bloomberg. We are 30 minutes into the trading day, still looking at green arrows across the board. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, investors are in wait-and-see mode. They're looking ahead to Jackson Hole for clues on the policy path ahead.
A crucial week for the race to the White House. Harris and Trump battle for momentum and attention as the Democratic National Convention kicks off in Chicago.
And raking in record revenue, the CEO of Lifetime joins us in studio to discuss his company's growth and the rise of pickleball. That'll be fun. But before we get there, let's take a check of these markets right now, because green on the screen, but pretty muted, and as you can see, concentrated to the S&P 500, at least when you're talking about equities. Of course, the big benchmark currently up about 0.1%, not too much there. The NASDAQ 100, I'm going to go ahead and call that unchanged. Of course, you take a look at the bond market as well. Unchanged. We have a big week ahead of us, though, when it comes to, of course, retail earnings. We have politics, and Matt, of course, we have Jackson Hole.
Yeah, absolutely. Focused on the economic picture right now. We have breaking economic data crossing the Bloomberg terminal for the numbers and the layout. Let's get right over to Michael McKee. He's Bloomberg's chief international economics and policy correspondent. So, Mike, what have we got?
Well, don't hold your breath. It's the index of leading economic indicators comes in down 0.6% for the month of July. That is worse than the 0.4 estimated. And nobody really cares. Here's the thing about the index of leading economic indicators. It used to tell us something about when we might be heading into recession, but you can see over on the right-hand side there that it has been negative since 2022, and we haven't had a recession, and there still doesn't seem to be one in train, and there is a feeling that perhaps it's another...
We haven't had a recession that we know of.
That we know of. It's another data point that has been somewhat corrupted by the pandemic and post-pandemic data issues that we have. So it does sound like bad news, but everybody's going to be waiting for Jay Powell instead.
Yeah, absolutely. You can see not too much reaction to this specific data point, but it feels like overall this market has been super, super sensitive to every piece of economic news that we get. And that's because the Fed told us that that's what they're doing. They're taking a look at the data. And you think about, of course, how that wraps into what we might hear from Jerome Powell himself on Friday. Everyone just wants to know how much they're going to go in September.
Well, I don't think you're going to get an answer. That's the thing about his speech is Powell has said all along that the Fed is data dependent and they are probably going to give us something of a green light, but not a full promise that they're going to cut rates because there's more data to come as we get into September. So he will probably talk about the idea that they have made more progress. They'll watch the data and it should soon be appropriate to cut rates. Then the question is, how far do they cut and how fast do they cut? And I don't think you get an answer to that one because I think he's basically going to say, we're going to experiment. We're going to go take it a meeting at a time until we find out what the neutral rate might be. And the final thing people are looking for is some sort of guidance on whether they change their economic framework, their monetary policy framework. They've got a review coming up in the fall, and he's probably not going to front run that. So.
The nerd in me really wants to ask about the framework, but the market person in me wants to ask about the bond market reaction. Ed Yardeni out with a note over the weekend asking whether it's time to short bonds. You have that 100 basis points at least of rate cuts baked into futures markets, but you have the 2 years still above 405. At the end of the day, which investor has a louder voice here. Who's right? I asked you this morning how many times the Fed would cut this year. How do you start to answer that question?
I don't. I duck that question. But I would quote the famous economist Clint Eastwood, who said in Dirty Harry, "Do you feel lucky, punk?" That's the answer to the question of whether it's time to short the bond market, because we do have a big jobs report coming up that will either confirm what we saw last month, that things are getting worse, or it will make everybody breathe a sigh of relief. And you could see bond markets trading heavily on that, depending on what kind of number we get.
I would love to know Clint Eastwood's, of course, September Fed call. I don't know if we're going to get it, but Mike McKee. Metallica. They're busy in Chicago. Mike McKee, really appreciate you taking the time. And be sure to stay tuned to Bloomberg for special coverage from Jackson Hole, of course. Fed Chair Jerome Powell will speak on Friday. We'll bring that to you live. But before we get there, it's only Monday. Let's get some perspective now from Nicole Inui. She is HSBC Head of Equity Strategy Americas. And I'll ask you the question I asked Nadia Lovell at the top of the 9 a.m. hour, and that's when you look out over this week. You have politics, you have earnings, you have Jackson Hole. What is the most important signal for markets at this juncture?
Well, as you said, the markets are data dependent. So I think the most important thing is what the macro data we're going to get, especially the labor data, which we're not going to get this week. So this week, the focus is going to be on earnings. And the earnings has been very strong in the second quarter. We're seeing companies beat on estimates, even though estimates were, I say, elevated. We had a high bar to beat in the quarter, and companies are churning in great results. And so I think, Powell, it's important we want to hear what Powell has to say. But at the end of the day, I think unless he signals that a rate cut is off the table in September, I don't see it having as much of an impact. So I think that the market's going to be focused on earnings, and it's going to be focused on the labor data that we're going to get.
Nicole, if a rate cut is clear that we're going to get that, right? This is the way this Fed works. They telegraph and then they do. But what about the path beyond that? I mean, do they continue cutting rates even if we're getting growth of like 2.5% and unemployment holds well under 5%?
Yeah, well, we expect the Fed to cut 25 basis points in September, and then another 25 basis point cuts for 2024. So it's going to be a gradual easing cycle for this year, and it's a little bit of front loading of rate cuts than what we had originally expected. We originally expected only 25 basis points a cut. Remember, the market is expecting a cool down in the economy in the second half of the year. The first half of the economy was growing at 3% plus. We expect that to slow to below 2%. And we think that the combination of inflation remaining under control, a cooling inflation data, if the labor market looks okay, we don't see deterioration, we think that path makes sense, the 25 basis point cuts, because we do expect to see this slowing economic growth. Again, not a recession. I think that's the big comment. We don't expect a recession, but we do expect a cooling economy over the second half of the year.
It's fascinating. Before we get to Friday, Liz Young over at SoFi points out that on Wednesday of this week, preliminary annual payrolls revisions gets released, and there could be a downward revision by as much as $1 million, according to a number of economists. At the end of the day, when you look to Friday, when you look to Jackson Hole, how concerned are you about where the labor market stands today and how the Fed might react to any potential weaknesses, given that the reason we saw the most recent weakness was the labor force participation rising?
Yeah. Well, the Fed has a dual mandate, so they're looking at the labor data. I think the concern at the last labor data is that the big rise in unemployment, but remember, unemployment is still at very low levels. So I think they're going to wait till we get the August jobs report. If we get unemployment, this big jump in unemployment as we saw in the previous month, I think that will definitely spook markets a bit. We'll have a rising concern of a recession, and the Fed will likely react on that. So I think it's, we have to see the labor data, continued deterioration in the labor data Remember, we're at 4.3% unemployment. It's still relatively low by historical standards. And as you said, a lot of that is the labor. You have increased labor supply, an increased labor participation rate. So that's impacting those numbers as well.
What do you buy into, a rate cut cycle, Nicole? Is there a standard playbook for this?
So it's the combination of rate cuts and no recession. And that is a very powerful combination for equities. Historically, you see equities rally around 10% after this sort of scenario. Going in with rate cuts, you want to be in consumer discretionary. This will give a lot of relief to these kind of, let's say, pockets of weakness that we're seeing in the economy, the housing market, the lower end consumer. So I think those consumer discretionary, we've been positive on consumer discretionary, but we have recognized you have to be very selective because you're seeing pockets of consumer strength in certain areas and weakness in others. But as we go into a rate cutting cycle, you want to be in those more high beta sectors. So I think that would be a good sector to focus on if we get this combination, which we expect, of rate cuts and no recession.
So rate cuts and no recession. I believe that the last time we spoke in June, your S&P 500 year-end target was 5,400. You think about where we're trading right now, we're getting close to 5,600. And if we do have that sort of benign combination coming up, rate cuts, no recession, are you going to upgrade that target?
So we have 5,400 as our base case, and that assumes a soft landing scenario. We do have an upside case, which is 5,700, and this is kind of the Goldilocks scenario. So this is we get rate cuts and you continue to see above trend GDP growth. So we're talking about GDP growth above 2%. We don't see this cooling in the second half of the year as we and consensus is expecting. So, and that with that, you see higher earnings growth that could help fuel higher earnings growth and a higher S&P towards year end. So, let's see. We're looking at a cycle where actually, GDP in the second quarter was extremely strong. If we continue to see that strength over the second half of the year, combined with inflation coming down, so it gives the Fed comfort to cut rates, you could start looking more at this sort of Goldilocks scenario for the end of the year.
It's interesting. You're starting to see more and more divergence heading into the end of the year over where earnings head from here, what multiples start to look like on the heels of those earnings, particularly as you head into 2025. Just want to point out Goldman's David Kostin's note this morning, where he said sales would rise by 4% next year compared with 6% this year, and that Wall Street has it wrong, that the estimates are too rosy. How do you feel?
For this year, I think companies are beating estimates. We're in line with consensus, but there could be some upside if we continue to see above trend growth for the second half of the year. A lot of this earnings growth that we're seeing are margin gains. I do recognize that is something that is more difficult to maintain over various quarters. It's much easier when you have sales growth. That's easier to have that operating leverage and to really kind of get that earnings growth. But you do see some sectors. Tech is still continuing to report double-digit earnings growth. You're seeing now financials, healthcare, utilities also catch-ups. We're seeing this catch-up of other sectors to where tech is growing. So high teen earnings growth. A lot of them will be comping very weak numbers from last year. So I think you can continue to see this earnings growth over the second half of the year with this very low comp base for some of these sectors.
Nicole, we thank you so very much for your time. That is Nicole Inui of HSBC. Now let's get a look at the stocks moving this hour. Here's Abigail Doolittle. Abby?
Well, the shares of HP Inc., Sonali, they are under pressure, down about 3.5%, 3.6%. This is Morgan Stanley has cut their rating to equal weight from overweight. The analysts there saying that the previous bullish call from the firm around personal systems growth, well, it's been fulfilled, and basically all current upside is essentially priced in. Turning to the shares of AMD, they are higher, and this is not always the case when you have a company acquiring another company, but up 1.4%, and they are, of course, acquiring acquiring server maker ZT Systems in a $4.9 billion deal. Data center technology investors, analysts thinking that it will help them better compete with NVIDIA. That could be one reason shares are higher. And then finally, Palo Alto Networks, a cybersecurity firm. Well, over the last 2 weeks or so, Matt, these shares up about 20% in sympathy with good results out of Fortinet and Checkpoint Solutions. Those results, the company is reporting tonight after the bell. Now they need to meet, beat, and also some analysts are saying really show that they are taking share from CrowdStrike based on that outage, that debacle back in July. Right now, up a very healthy 2.8% into ahead of that report.
All right, Abigail, thanks very much. Abigail Doolittle looking at Palo Alto there. Coming up, Democrats convene in Chicago. President Biden will be speaking there tonight. We'll look at what to expect from the DNC next. This is Bloomberg. Let's get now to high interest to look at what's making headlines around the world. A strategy that's delivered specialist investors huge returns is now coming under scrutiny from regulators. Jamaica's catastrophe bond wasn't triggered by Hurricane Beryl. Investors were shielded from losses despite the island being declared a disaster area because of a requirement for the precise level of air pressure not being met to unlock the payout. Goldman's David Kostin says he thinks corporate America's expectations for sales next year are too high. The strategist and his team point out a moderating economy and a weaker greenback in their outlook for the economy, which is likely to lead to some earnings misses in 2025. And Chicago and its governor have been elevated to the national spotlight thanks to the Democratic National Convention this week. Billionaire J.B. Pritzker personally lobbied President Biden and wooed the bid team with fancy meals and even a private concert. Katie from Metallica.
Well, joining us now on the ground from the Democratic National Convention in Chicago, it's not Metallica, but it is Bloomberg Balance of Power co-anchor Kayleigh Lines, who's just as good. And Kayleigh, of course, it is the start of what's going to be a very consequential week. Of course, it feels like the Democratic Party is still reeling from that historic decision from Joe Biden to step down from the campaign. Now momentum is building behind Harris. What would a successful DNC look like?
Well, a successful DNC is essentially going to look like a party that is able to unify around its now nominee, Vice President Kamala Harris. Of course, she already is the nominee based on a virtual roll call that the delegates did earlier this month. So for all real intents and purposes, this is really about ceremony and the formality of the convention and the celebration of it this week. Harris is coming into the proceedings here in Chicago with momentum behind her. We got a series of new polls out this weekend, one from the Washington Post, ABC, and Ipsos, a national poll that shows her ahead of Trump, 49% to 45%, so a 4-point spread. There was more from New York Times Siena polling that shows in Sunbelt states, including Arizona and North Carolina, she too has polled ahead. So she's doing significantly better than Biden was when he left the race just 4 weeks ago. And of course, we will hear from Joe Biden tonight. He is going to be the headline speaker at this first evening of the DNC, a speech that is probably going to be in part about his legacy and the over 3.5 years he has served as president of the United States, but also in part about him passing the torch and making the case for the woman he selected to be his vice president and now would like to see elected president in November. It's certainly going to be a very emotional evening, I'm sure, in the United Center behind me for President Biden and those who have been supporters of him.
It's interesting as well because up till this point, there's been a lot of conversation about how there is so little detail about what Kamala Harris's plan would be, not just her economic plan, but her policy proposals writ large. How much do we expect to actually get this week regarding what her plan would be?
Well, we've already started to hear more. On Friday, she gave a speech in North Carolina about some of her economic policy plans that includes addressing the housing shortage with a $25,000 down payment assistance for first-time homebuyers, incentives in order to have more housing supply built and that kind of thing. She also, of course, is advocating to crack down on price gouging and punish companies who are seeking excess profits. This is something that has been criticized by a lot of economists in recent days since she's rolled that out, and of course was spotlighted by Donald Trump as well in his own own campaign events this weekend. He has taken to calling her Comrade Kamala, suggesting that some of these policies are more communist than perhaps capitalist and democratic. So certainly some of those have been met with skepticism. We will hear more about the Democratic policy platform over the next several days as it's adopted by the delegates here in Chicago. But it is, you could see how there is an incentive for the Harris campaign to remain more vague, because the more that she details, the more she opens herself to criticism. That said, the lack of detailing of it, the ability of her, or the inability so far of her to be spoken to by the press frequently and ad-libbed off-the-cuff conversations, to sit down for a major interview, we haven't seen that yet. And after her days here in Chicago, she's likely going to face growing pressure to do so, as that has been an attack point from the Vance and Trump campaign.
You know, in 1968, Lyndon Johnson said he wasn't going to seek a second term. They held their convention, the Democrats did, in Chicago, and it was an absolute mess, mainly because of war protests at the time. Are you seeing protesters there, anti-Israel protesters in Chicago, and will they, you know, do their best to give this election to Donald Trump?
Well, certainly protesters have already been active here in Chicago. When I got in last night, Matt, it was very difficult to get to my hotel as there was protests underway, a lot of streets blocked off, and that will remain the case throughout the duration of this week. There is going to be a high security presence. There are cops pretty much everywhere that you look, and there are going to be organized protests throughout the week that we understand. The question is going to be, to what extent do those stay outside of the convention center, and to what degree will they actually make their way inside the United Center and actually potentially be disruptive to the speeches and the activity that will happen there each evening. We've already seen protesters disrupting Vice President Harris as she speaks at campaign events over the course of the last week and change. At one time, she told them she's speaking and kind of tried to shut them down. At others, she has reacted more with calls for an immediate ceasefire in Gaza. So it will be interesting to see how not just her, but the other high-profile Democrats that will speak throughout the convention, including former presidents like Bill Clinton and Barack Obama, how all of that is handled, and whether or not it does show that there still remains a deep divide within the Democratic Party, knowing that some Democrats had to show up here in Chicago as uncommitted because of protest votes against what was then candidate and President Joe Biden during the primary process, in which many chose not to vote for him over protests over the war of Israel and Gaza. So certainly it will be a factor. We're all just waiting to see if it does turn into something more like 1968, and these protests actually could be very disruptive.
Kaylee, and while you have the Democrats in Chicago, you also have the Republican Party across the country campaigning as well, including J.D. Vance in the key swing state of Pennsylvania. The RNC had the luxury of kind of having an uninterrupted RNC. There wasn't really Kamala Harris on the stage yet, but now you have competition. How does that really set up the DNC for more noise?
Well, certainly Donald Trump is going to try his best to counter-program this, as will his vice presidential nominee, J.D. Vance, throughout the course of the week. We're going to see them on the move in swing states. Donald Trump and his team have said that they will be doing daily gaggles with the press conferences, again, trying to draw that contrast between Donald Trump, who is willing to answer questions, and Kamala Harris, who they say is not, and frankly hasn't been super willing to do at this time. What's also interesting is on Thursday evening, which is the main event here at the DNC, it is the night that Harris gives her actual formal acceptance speech of the nomination. Donald Trump is going to counter-program that by going to the border, knowing that is one of the issues that the vice president is the weakest on. It's the border and the economy. I mentioned earlier that Washington Post ABC Ipsos poll that does show her ahead by 4 points nationally, but she's also losing on the economy and inflation right now by 9 points to Donald Trump.
All right, Bloomberg's Kaylee Lyons, thank you so much. Of course, Kaylee, Joe Matthew, and Anne-Marie Hordern will be in Chicago throughout the week for the DNC, and tune in on Thursday night for our special coverage of Kamala Harris's acceptance speech. This is Bloomberg.
Lifetime is teaming up with Tennis Hall of Famer Andre Agassi to change America's fastest growing sport. The fitness giant will reveal the ultimate pickleball at an event today right here in New York City. The patent-pending ball is designed to address issues of inconsistent speed, bounce, and durability. It will debut exclusively later this month at the 170 Lifetime clubs. Joining us now at the desk is the CEO of Lifetime, Bahram Akradi. Thanks so much for coming in.
Thank you.
To me, very exciting as a pickleball pickleball player. I have to ask, though, what's changed? I've never really noticed personally, and I'm not an advanced player, a huge problem with the balls that we use now.
Yeah, so there are really good balls. Like Franklin makes a great ball. It's consistent. It's just a little slower. So the higher end player wants a faster ball, and the faster balls have flaws with their consistency. So the holes are inconsistent, the pattern is inconsistent, the size is not right. So they play very inconsistent. It frustrates you when you expect the ball to bounce a certain way and bounces different. They also lack durability. So what we did is we tried to create a ball that gives you the speed that everybody wants, but also has the consistency that the players would seek.
All right, we have a couple of the balls here, right?
I was going to say, hold
You
them
brought
up.
some. So this is the actual ball, Eric, if you want to get the close-up shot on this. How important is pickleball to the growth of Lifetime? We have a club by me in Westchester, and everybody I know who's joined goes there because of the pickleball courts and the round robins that you organize.
Yeah. You know, when I used to play tennis, and once I got roped into playing pickleball about 3 years ago, it was immediately obvious that this is the sport that is going to be played by all people. And we see it today. We have young kids are playing, very old people are playing, and everybody in between. I believe it will become an Olympic sport. I believe it will become a high school, college sport. It should. It's the fastest growing. So it's very accessible by all kinds of people.
But can you quantify how important it is to your growth?
Yeah, you know, we've had about 5 or 6% of our total traffic. You know, we have about 112 and growing million visits a year. About 5 or 6% of those visits right now are purely just because of pickleball. So it's been significant as part of our comeback and rewiring the business. It's been amazing.
That's pretty wild. And I mean, it is a much more accessible sport, to your point. I mean, the only time I've played pickleball, it's been with my parents. I don't think I would play tennis with them necessarily. But I do want to talk about the monthly dues of your clubs, because like you mentioned, of course, you have a growing audience of membership. I was looking through your earnings call. So your average monthly dues, $198. That's up approximately 13% from the second quarter of last year. Where are you on pricing right now? Do you think that you're going to break 200, or what's the plan there?
Actually, the people who are signing up, about 20 to 30,000 people a month that sign up every month, they're signing up about $230 to $240 a month. And we have no salespeople, no promotions, because this is just purely desirability of product and the customers coming in. We price the clubs to manage the experience of the customer. So when the clubs start getting a little bit pinched, like if you go, right now we don't have room to get more people in Westchester. So Westchester, as many as about 50 other clubs are on a wait list right now. And so it's really a function of adjusting the price to maximize the experience for a customer.
You know, it's interesting when you think about racket sports. You have Andre Agassi today. I am one of those people that plays tennis and not paddle. I'm a snob, or not tennis and not pickleball. I'm a snob. There are a lot of racket sports out there. So what demographic are you really going for out here? Are there people who are converting from tennis? You know, paddle is also getting a lot of steam in New York.
It's really interesting. Lifetime has been the largest provider of tennis by a magnitude of 2 or 3 times. And we're still building more tennis facilities, and nobody else really is. Now, it's not just tennis. It's also the largest provider of squash and the largest provider of pickleball, by magnitude of probably about 10. So the company is growing at about 1 million square feet a year, and that's just indoor, and there's outdoor square footage on top of that. Therefore, you know, we're addressing all those sports. But yesterday, I was in the club playing pickleball, and this gentleman who's been with a member with me for more than 30 years, with his family. His kids were there with their little bambinos, but the whole family was playing pickleball. And all of these people used to be tennis players.
That's the draw. That's the draw. My parents played tennis, but they're getting a little old now. And when we go to the club, we'll play pickleball instead, because we can all play it together. I also like to play competitively, though, with people more my age. You have not just Agassi, but Ben Johns. I own his racket, right? There are celebrity pickleball players now, and obviously leagues that are growing. You say you think this could become an Olympic sport. Are you surprised by the growth?
Absolutely not. Like I said, as soon as I played, It was obvious because the range of the sport. Now, I personally love to play the singles game. It's literally as exciting as a
singles pickleball?
Singles. It's as exciting as playing a singles tennis match. And you will see in the next 5-10 years, the singles pickleball matches will be as exciting as the single tennis matches in the world.
All right, there you go. Something to look forward to there. And it'll be interesting to see if it is added to the Olympics, if breakdancing.
Yeah.
Well, flag football.
Flag football.
Yeah.
So there you have it. I do want to talk about what this means for expansion plans
Right.
for Lifetime. Of course, you achieved being cash flow positive. Part of the reason why you're there is because you decelerated the pace of club expansions. When you think about, though, this quickly growing segment, do you plan to re-accelerate opening new club locations?
We are right now. The company is now generating substantial free cash flow after our maintenance capex and interest payments. We are very, very close to attaining a BB credit, and that will also lower our interest. Increased cash flow for the company from here going forward on an ongoing basis is more than sufficient to pay for all the additional growth that we have. And we will continue to grow the company in a double-digit top line, bottom line. I don't see any reason that why we can't do that.
What's the cost of acquisition here? When you were talking about your expansion plans, all I was thinking was, my God, that's a lot of real estate. And are you finding discounts now that you're seeing some competitors even file for bankruptcy? You're seeing real. Right, exactly. Yeah. You're seeing competitors file for bankruptcy, and you're also seeing commercial real estate prices really starting to plunge. Do you see an opportunity?
Yeah, there's absolute opportunity in real estate at all times. Real estate sort of moves in different buckets. You know, some part of the real estate is hot, just like a stock market, and some part are cold. Lifetime, with the Lifetime Living business model, and then our transformation of the malls, we bring in more traffic and high-quality people than almost any anchor, and we can transform the fundamental results of a residential building. So all of those things are providing additional opportunities for growth. We have multiple growth opportunities. So it's really, we have the pipeline for the next 5-6 years. It's at least 100 deals in the pipeline right now. So we really aren't seeing any, and construction costs are starting to taming down. I think next year will be better than this year. So yes, all things are working in the right direction.
You talk to us just quickly, we have 30 seconds, about why this is a better pickleball. You are an engineer. You studied engineering at University of Colorado, right?
Yeah.
Why is this better than, you know, a Franklin or whatever other ball that we play with today?
So the pickleballs generally have all the rest of them have fewer number of holes, and then the holes are much bigger. And those bigger holes will create insufficient accuracy for the ball to bounce off the ground. I don't want to get to you said you have 30 seconds, so that's about it. And then they have sharp edges. There's basically some obvious flaws in the design of those clubs. We just eliminate all the flaws.
Eliminate all the flaws. Everyone should do that.
That's a great idea.
Yeah, big time. We'll have a great time at the event tonight. Really appreciate you taking the time with us on set. Of course, that is Bahram Akradi, the CEO of Lifetime. Meanwhile, about an hour into the U.S. trading day, let's get a check on these markets with Bloomberg's Abigail Doolittle.
Right now, Katie, investors are mainly treading water. We have the S&P 500 up about 0.2%. These are the futures overnight, and you can see that's about as high as we've been at one point around, let's call it 4 a.m. New York time, down slightly, up. Down slightly, almost down moments ago, but in any case, investors waiting for more information. Now, a piece of this story, of course, is the Japanese yen. On the day, dollar yen down as much as 1%. Let's take a look at the technicals here, because everybody's wondering whether or not there's more to the carry trade. This chart suggests that there probably is more to that unwind. So you can see the dollar yen big uptrend here, and then at the beginning of July, Haven yen started to rally. That pushed dollar yen down below this uptrend. Right now, we're taking a new leg lower. What's really interesting here is there's a technical pattern in there that carries a target for about 130. Well, the 200-day moving average is also at 130. When you have a confluence of technical factors coming into one area, it usually suggests that's going to happen. Should this happen, that could put continued or new pressure on risk assets as we had about 2 weeks ago. So that's something we'll be keeping an eye on. We'll also be keeping an eye on the DNC. There is a burgeoning Harris trade, I would say, and it is in the green for the most part today. So, of course, last week she outlined some policy ideas, one of them being to provide new home buyers, first-time home buyers, with a $25,000 credit. Meritage Homes and D.R. Horton, both of these home builders cater to the first-time buyer. These stocks higher. And then also talking about capping grocery prices. Well, Albertson and Kroger, they are down. Albertson's down slightly, Kroger down about 0.6%. These policies may be hard to implement, but you can at least see that the stocks may be moving off of those ideas, Sonali.
Abby, thank you so very much for the Harris trade. We'll keep an eye on it throughout the week. Now coming up, investors are also awaiting Powell's speech in Jackson Hole. We're going to get the market view from Brian Higgins of King Street Capital next. This is Bloomberg. And it's time now for our Wall Street Beat. This week's event comes Friday when Fed Chair Jerome Powell is expected to give fresh insights into the course of monetary policy, of course, at Jackson Hole. Wall Street is betting that Powell will signal rate cuts coming. Joining us now at the desk is Brian Higgins, co-founder and managing partner at King Street. And Brian, you know, one thing I want to hone right in on is there's a lot of concern about a weakening economy, about slowing growth, and growth might be actually a big part of the story on Friday. When you look across the economy, across the credits that you are picking, where is there more weakness than what meets the eye? The market is playing it off like everything's okay, but bankruptcies are rising.
Well, I think if you look at the triple C bucket, which is the usual culprit, the bankruptcies to come, if you will, that's at 975. But if you look at the triple C versus the high yield index, that's at 20-year highs. And so the index is at 330, high yield, sort of nothing to see here. Strip out TMT, it's at 270, again, quite tight, investment grade at 100 over. So all these don't sound like really terrible things that we should be worried about. However, it's really about the population and how they're struggling, the lower middle income consumers doing trade-offs. So certain industries are going to be impacted. You see it in the consumer, whether it's cruise or retail or restaurants or theme parks. You know, they're all struggling. And so Walmart did well in earnings. However, it was people switching to Walmart from other goods. And so it's tale of two cities, as it were.
But when you look at the tale of two cities here, you know, how much of a problem is there for the Fed as the Fed plays catch up here? We've been talking about this lowering consumer weakening for a while. Earlier this year, I was in your office, we're talking about this issue here about the consumer weakening. We are here now, yet we are weeks off from any potential cut. How much worse does it get this year?
Well, I think this year, because of the strength of the economy, because there's so much excess stimulus that still is around from the pandemic, our money supply has grown dramatically. The Fed's balance sheet has not shrunk as much as perhaps others would like to see. Gold is at record high. Equity levels are quite high. You haven't had as much write-downs in real estate or private equity or venture capital, et cetera. So there's still a lot of excess value and a lot of excess wealth that, you know, the 71% consumption-based economy is enjoying. Again, the tale of two cities, the weaker cohort group, lower middle-income consumers are struggling.
So I want to talk about where the risks are, specifically in the private market. Of course, you mentioned triple Cs, et cetera, in the public debt markets. But when you take a look at the private credit markets, which by nature are opaque, are there any particular areas that you think are storing up risk here? And how do you plan to capitalize on those opportunities, if so?
Well, the important thing to note is private credit, their number of negative cash flow companies have doubled. And so we do a number of liability management exercises where we are solution providers to companies that are struggling and hope that they can get through these tough spots. They borrow money at zero, rates have increased, in certain cases spreads have increased, they haven't grown as much as they have contemplated, but they're good companies and there's opportunities to lend to those companies.
And I think it's telling that at this point in the cycle, you say liability management exercise, people start to think creditor on creditor violence. Of course, there was a great story on the Bloomberg terminal last week that King Street was name-checked in, that you're starting to see more instances of those sort of actions coming about. You've recently raised what's called a capital solution strategy group. I mean, what do you think it says about where we are when it comes to this economic cycle? You mentioned that the number of negative cash flow companies in private credit land has doubled. I mean, are we just going to see more and more of these types of actions?
I do think you'll see more and more. I've been doing distress since 1989, so a very long time, a number of distressed and bankrupt cycles. bankruptcies are very disruptive. They're very expensive for companies. So to the extent you can restructure outside of bankruptcy, yet use this new money, again, to go through these tough cycles, that's great. However, when you had excesses, again, zero rates, people had a little bit excess spread, and then they lent into these situations, very frothy credit markets. There was a lot of borrowing done with very weak covenant packages. And so that needs to be sorted out. New lending today is going to be done with stronger covenant packages. And really, we're looking at good industries, good companies within those, and good parts of the capital structure to invest in. And there's a number of opportunities within that sector. Now, we're long short credit investors, so there's also short opportunities as well. And that's more in the listed opportunities.
Where do you see the short opportunities? Are they just individuals, or do you see?
Yeah, no, individuals. Certainly, we're not index, investors. So we'll look at whether it be airlines or retail or anywhere where the consumer is struggling. Also, these are deep cyclical companies that as we go into this economic cycle, there's priced to perfection because, again, there's a lot of passive money that's chasing these opportunities for yield, particularly as the rates start to go down. They're going to then pivot to fixed income. But then you got to be careful in this part of the economic cycle to be able to appreciate risk reward in terms of the incremental spread.
What happens to all of this liquidity? I mean, as the consumer racks up more debt, you see more bankruptcies on the corporate side. We go into the low of an economic cycle. We still have, as you mentioned, the private equity cash pile, the private credit cash pile. If you look at money market funds, it just goes up and to the right. What happens to all of that liquidity in a recession?
Well, unless it's spent or unless it's written down, it still exists and it's borrowable, leverageable. So if you look at this carry trade that sort of went out, there's a fair amount of leverage. Bank balance sheets are quite healthy. However, they're trying to pull back because being mindful of the credit cycle that's impending. If you look at investors, institutional investors, they're struggling with allocations. They haven't had their recycling. And so to the extent they get dividends, if they get less dividends back, then that's going to create pressure on the ecosystem. And so liquidity, that's why I call it a slow motion car crash, because it's just taking so long given this tremendous amount of liquidity that exists in the markets.
Brian, I want to do a thing here. I want to pull up BCY Go on the terminal. This is the bankruptcy dashboard. And as you'd been saying, consumer discretionary is about a fourth of the total activity you're seeing right now, but real estate is not too far behind. As somebody that looks at this as an opportunity, where do you start to put your chips right now?
Well, there's a number of things. Real estate financing has been quite interesting. So we've been able to do that around the world as banks pull back. We also came across an interesting company, which is a data center business, Colivor, and that focuses on AI and high-performance compute. Why that's interesting is because it can do up to 250 kilowatts per cabinet versus normal air-cooled data centers that can only do 5, 10, 20. These new NVIDIA chips require ever more power, produces ever more heat. And so as we go into this AI, which is going to factor into how companies are impacted as winners and losers, and a tremendous spend that's going on, we're able to capitalize on that as people migrate from a public cloud to a private cloud. They go from the LLM models, the learning models, to inference. And so there's a number of opportunities that we see super exciting with this data center acquisition.
All right, data centers, so hot right now. Brian Higgins, it's great to see you again. That, of course, Brian Higgins of King Street. Now, coming up, the market-moving events you need to be watching this week, including a string of retail earnings. That's next in our Trading Diary. This is Bloomberg.
Let's get to the Trading Diary. What you need to be watching this week. The Democratic National Convention, of course, begins today in Chicago. Then tomorrow, we're going to get another read on the consumer with Lowe's earnings. On Wednesday, more retailers. We get Macy's, Target, and TJX. And then we get the Fed minutes on that day as well. Fed minutes come on Hump Day. We round out the week with Fed Chair Jerome Powell speaking at Jackson Hole on Friday, and it would be sweet, I think, if we got another 9-minute speech.
That would be great. An 8-minute mic drop moment.
Yeah.
I don't know. It seems like everyone is telling us to not get our hopes up.
Was it 8 minutes?
I think it was. I think it was 8
9.
minutes. Yeah, we'll fact check after the show.
So after Jobs Day, bye.
Exactly. I think he's going to try to make no news there. At least that's what people on TV tell me. Let's take a check of these markets because we do have a rally on our hand. The S&P 500 up about 0.4%, building here on its 8th straight day of gains.
Wow.
If that holds, it'll be the longest streak since November 2023. The Nasdaq 100 managing to peak into the green here, currently up about 0.3%. The bond market, not much going on, guys. The 10-year yield, I'm going to go ahead and call that unchanged. We are holding at 3.87. Of course, a lot could change this week. You think about, of course, Jackson Hole, but we also have politics, which is a risk factor. And then we have retail earnings, which I really am excited to see this week.
Those payroll revisions on Wednesday, I think they're undercounted for here. I think that's going to matter a lot before we get into Friday. If we're thinking about the intra-week volatility, buying opportunities, or even recalibrations of what to expect. Yeah, the 10-year yield's barely moving, but I think it's interesting that the 2-year is still above 405.
Yeah, initial jobless claims, I think people are always watching very closely. I consistently hear from people who monitor data that some of it is fuzzy or, the margin of error is too big, but this is one where they are, very specifically measured, and that's why they're so reliable.
All right, so keep your eyes peeled there. And of course, tune in tomorrow on Open Interest. Join us in the C-suite, where we'll be joined by OnBridge CEO Greg Abel tomorrow. But that does it for Bloomberg Open Interest. This is Bloomberg.